Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Monday, January 14th, 2008. Well, today was an up day in the markets, as everyone probably knows by now, and we can all say thank you to IBM for the most part. There were a few other little things like a possible investment by Kuwait in Merrill Lynch that contributed in the upside to the market, but for the most part it was IBM pre-releasing earnings here, coming in well above expectations in pretty much every way. And that gave the futures an initial push pre-market, and they just continued to kind of roar up early in the day and kind of just hovered near the highs most of the day here. And we'll look into these charts quickly here over the course of this video, but I just want to talk a little bit about that as we get started. Now, let's go right into the NASDAQ chart. Some interesting chart patterns developing here, and we're just going to have to keep watch of it. We talked last week about some key factors, okay? And these factors basically are all telling us a few different things. Number one, I've been saying expect a rate cut before the end of January meeting, and I still think that's a very viable option. But in the last few videos, I said it may wait for this rate cut until the CPI number, which comes out Wednesday morning at 8:30 a.m. Eastern Time. So there is a few different angles here to look at. I think the rate cuts are coming, no doubt about it. I think we are a little oversold here and maybe need a little push up. But at the same instance, that CPI number Wednesday morning at 8:30 is going to be absolutely huge. If it comes in showing less inflation at the consumer level, we could see a massive rally as the Fed will then be able to lower interest rates dramatically or more than people expect. Should it come in hotter, that could be a negative in the near term as the markets get worried the Fed can't drop interest rates like they would like or the market wishes them to. So it's all hinging here on Wednesday. Now, not only do we have this economic data, or a lot of economic data this week, but we also have Intel reporting tomorrow after the bell, along with Citigroup before the bell tomorrow. Now, Citigroup is, in my opinion, a non-event. Everyone knows it's going to be horrible, unless they come out and say something really, really bad, which is even worse than expectations. And trust me, expectations are bad at this point. Or much better than expectations. It's not going to affect the market really much at all. So I don't really expect major, maneuvers here. Now, should they come in and announce maybe a buy-in by some foreign government or company or something like that, maybe that gives the market a boost, or at least the financials, to know that there's some foreign firms stepping up here. But it's really all speculation at this point, and people expect pretty bad numbers here. A lot of write-downs in the billions of dollars as a write-down. Now, Intel could be an interesting idea. And let's look at Intel before we get into this, just going over what tomorrow will be. You can see the fall Intel, and this is the daily, by the way, so this is a pretty ugly for a daily chart. So you can see you almost have this M pattern here formation, which I think we continue to form. But look at that M, all right? You can even drag it all the way down here. Then today we bounced. Once IBM released earnings, people began to say, wait a minute, maybe some of these companies aren't going to be as bad as we thought. And Intel getting punished from basically $27 down to $22 right here, people said, wait a minute, they're reporting tomorrow, maybe they'll do well like IBM. Buy, 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 buy. Now, who knows if that's the truth? I don't know. I don't pretend to know. But either way, it drove Intel up today $1 and change, closing up very nicely today on a bounce. Now, that basically happened pretty much across the board in anything that was beaten down. There were a couple sectors that really didn't see much of a bounce. Predominantly solar, which has been a runner about 2 weeks ago prior for the month, was a major runner in December. And so far in these bounces, solar has not participated. I do think eventually any good news that comes out in the solar industry, a big contract for one of these big solar players, could drive the whole sector positive for a nice bounce. And I want to show you a few charts here. You can see the First Solar daily chart here, big push down. You can see what's the other one here? SOLF. You can see this drop right here. You're basically talking about a move from $40 back to $25. So a $15 drop in a $40 stock just because the sector was well overbought. And we warned everyone in this area right around here to stay away from solar, as it could do something like this. But when you're looking at a sector, it could here, at least on this stock, it may test that 50 moving average there, but at some point it will have like a $1 or $2 bounce in it before it retraces back down or goes higher. Who knows? I just look for the bounces along the way and capitalize on the quick scalps here and there. So you never know. Maybe it sees the 50 moving average. Maybe it bounces before then. I don't know. There's other stocks just like that. JA Solar, same type of chart, although not quite as dramatic here as we've seen that one pretty much stay near the highs. Let's look at SPWR, and you can see that one is well off the highs from here to here. Now, a couple other ones that had dramatic runs like CSUN. Look at that chart. Basically going from $10 to $20 and then back to about $11.50 here. And that's dramatic. I mean, you look at that type of chart pattern. It's a rare chart pattern. You see that. It's just such a dramatic move. Every day was a dramatic move. And today, again, it was down 50 cents, even though the market was up dramatically. So that kind of shows relative weakness. And you always want to pay attention to that. Yes, it was a former runner, but if it can't get legs on a day when the NASDAQ's up 38, you never know. Well, maybe it gets legs tomorrow, maybe the next day, who knows. But at least for today, it was not in favor. Across the board, we saw some interesting moves. We saw oil up today. Gold is over 900 now, which is just dramatic. And now I just want to kind of focus in on the markets here, guys. So again, we're looking at the NASDAQ daily chart, and you can see that M pattern we talked about so beautifully here forming. And the interesting thing is going to be, we talked whether or not this was the start of an A pattern move up for the MA, or was it still kind of hovering down and we're still going to make that move up? Because initially we thought this was the A pattern, and then we retraced down, but now we're moving back up, so this just could be one large A pattern here, forming here. It could take a few days to form. So this could be looking more like a A pattern to the side here. And with all this unknown, I continue to stay mostly in cash overnight. It's just too risky to step out on a limb here and go short the markets or long the markets. Believe it or not, I have to somewhat favor the long side, and it's only by a little bit. And again, that's just my humble opinion. But you got to favor the long side because there's so many unknowns to the upside. You got the Fed lurking. You got the economic stimulus package coming by Bush, probably. You have options expiration. And we all should have learned lessons by now, as every options expiration over the past 3-4 months, we've seen dramatic moves in the opposite direction than what the market's expecting, or what the market, the average, I should say, the average has been expecting. So again, we've been in such a hard downtrend here, options expiration, you got to lean towards the upside because there's too many puts in the market usually with this big move down. So again, the big money tries to push all the market in the opposite direction to close as many of those options out of the money so they don't have to pay them off. All right, and they expire worthless, thus the premium gets paid to the person that wrote it, and etc., etc. So that's the idea behind options expiration. You also got CPI numbers. People are fearing the worst here with CPI, I feel like. People are kind of looking at the economy as in recession, recession, recession. So you're kind of getting this worst case view here. If earnings begin to come in decent, and you have also earnings coming out now, and you got Kuwait possibly investing in Merrill Lynch, you got the IBM news today, it is possible we see a small move up. And again, I don't want to say, you know, a small move up in my book is probably maybe on the upside in this area. And ideally, when you get up there, this 20 moving average will have moved down to this point here. And this is where you're going to hit resistance on the upside. You see this breakdown in the M pattern at the bottoms right here, and I drew this in very sloppy, so don't get wrong. It's not exact by any stretch, but it's in the general proximity, a possible move back to there. Now, again, anything can happen on any day, and that's why I don't bet my own personal money on that side in a heavy way, because, as I said, I could wake up tomorrow, the future's down 50 points on the S&P or up 50 points on the S&P. You just never know in this type of market. It is extremely dangerous out there. Probably one of the most volatile, crazy markets since the internet bubble was collapsing back then in 2000 to 2002. Just an unbelievable market, and you just got to err on the side of caution. Now let's look at the ES future chart here, and we'll look at the intraday chart. And you can see, folks, some crazy prints here on the ES futures, and that's, you know, I'm not going to go into that really. Let's just focus in here, and you can basically see this uptrend right here. We bounced off of it twice here. We started it here, 1, 2, 3. And for the most part, we trended near the upside of that. And I just want to point out this again. I focus on symmetry in markets just so much. And if you can see, look at these parallel lines. Everything is so symmetric. You know, you have perfect symmetry across the board here. And you can see, pushed up, hovered right on this line here, pulled back to this line, up to that line, and look at how parallel they are. And the market seems to stay in that range. So if you ever get good enough where you can actually draw these lines ahead of time, for instance, let's say we drew them right up to this point. Alright, and you can pretty much see that's happening. Then right on this point, you give it the market a shot, and you go long, and you ride it up right until it hits that point. Go short maybe, drop till there, moves back up, etc. But the point being is that if you get to that point, you can really maneuver the market and understand the symmetry of the market. Alright, now what does tomorrow bring? I think tomorrow may be quiet, although we do have Citigroup's earnings early on. We have some earnings coming out early on, but for the most part, it's all about Intel after the bell, and realistically, it's about, or basically, it's about the CPI numbers on Wednesday morning. That's the big one, folks. No doubt about that. Anyways, folks, come join the intraday stock chat. Love the stock chat. Love being in there. Love hanging out with everyone. We have a great time. It continues to grow in knowledge base and in people as we continue to bring in more people. It's a great atmosphere, a great learning experience, and a great trading environment. Have a wonderful evening, folks. Be ready. The volatility will continue in this market. Be careful. Be safe. We'll talk to you tomorrow.